and welcome to our Indianomics special, the IMF World View. The top brass of the IMF was here in India over the weekend for the Emerging Asia Conference. We present to you two gentlemen who lead the fund's economy view and the fund's capital markets view. I have with me Dr. Maurice Obstfeld, the chief economist at the IMF, and in a bit we will be joined by Dr. Vinals, director of the IMF's Monetary and Capital Markets Department. But first up, we have Dr. Obstfeld waiting. Before we go to you, sir, maybe just play a bite of Governor Raghuram Rajan's bit on how he hopes the IMF can look at unconventional monetary policies and their impact on the global economy.
We have to be careful as we go forward that on the one hand we penalize criminal actions, and that it's not the regulator but the investigative agencies and the judiciary which will have to take that up. But at the same time we don't indulge in a broad fishing expedition which then becomes a reason for banks to get worried about making loans, which then will hamper the recovery as well as hamper the absolutely important investments in infrastructure that have to take place. So as a country, as a system, we have to draw that balance very carefully.
Welcome, Dr. Obstfeld. That was Governor Rajan asking whether policies which have negative spillovers can be marked red and those which have positive global spillovers be marked green. In your opinion, is this feasible in the near term?
Well, I certainly welcome his call to study the effects of these policies. I don't think we've done enough of that, and I think we have a lot to learn. I do worry about the certainty with which we can reach conclusions and whether that could actually be a basis for classifying policies as red, yellow, or green. I would also worry that policies that would be red or yellow for some countries might be green for other countries. Countries are very diverse. And to the extent that there are those differences, it might undermine the sense of fairness of any such system.
Yes, but even now, Dr. Obstfeld, can the IMF object to any country's policy if they think it is only directed towards depreciating their currency and capturing other people's markets?
Well, the fund does take a position, and these are in its articles of agreement, that deliberate undervaluation for the purpose of obtaining an advantage in exports is not consistent with its norms. But on the other hand, monetary policy meant that ensuring price stability and full employment is fully consistent with its norms. Now, those policies may and often do have impacts on exchange rates.
All right, let me now come to the global economy. What's your take on the IMF's growth projections for 2016? Like in previous years, are you likely to see them getting revised or downgraded?
We're not as optimistic as we were, I think it's fair to say, and we perceive greater downside risks than a few months ago. That's why we think it's important for governments to adopt growth-creating policies, both in the fiscal sphere and in the structural sphere, to aid monetary policy. Monetary policy will be much more effective if accompanied by other supportive policies.
Okay, let me ask you for some positives on the global economy. Will you be upgrading your forecast of Chinese growth after Premier Li Keqiang's announcements at the People's Congress last week?
Well, our view is that not only is the quantity of growth for China important, but so is the quality of growth. And we view a safe range for them, one in which growth will be more sustainable, to be somewhat lower than what they've set out. Now, having said that, I have no doubt they have the policy levers that would allow them to reach their targets. The question is whether that set of policy levers is really conducive to their longer-run goals of rebalancing the economy, making it more consumption-based, and achieving a sustainable rate of growth.
Then do you expect growth rates in the developed countries like the US and the Europe to be downgraded?
You know, there are a number of risks out there, and I could list about 6 or 7. One very salient risk is renewed financial volatility, which could bring more financial tightening, and that could adversely affect emerging markets. We also see a range of geopolitical risks, ranging from the refugee crisis to Brexit, which could also immediately have effects in financial markets. In the Eurozone, growth seems to have lost some momentum, and I think the ECB's actions last week show that they're concerned about that as well. So certainly no shortage of downside developments that could play out.
Dr. Obstfeld, you know, the kind of bottoming out we saw in crude and metal prices over the last 3 or 4 weeks, are you sure that that will last? Could there be further downsides in commodity prices if global growth is so doubtful as you put it?
Yeah, it's possible that you know, commodities could retrace some of the ground they've made up. You know, there are very strong demand effects there. You know, in terms of oil, there are also very strong supply effects, and you know, to some extent, the oil price is the hostage of you know, a range of possible geopolitical developments.
You know, Dr. Obstfeld, many IMF officials like you and Ms. Lagarde, even Jose Vinals, keep saying that countries with fiscal space must spend. But who are these countries with fiscal space? It appears almost that most governments are reeling under huge debt.
Well, debt is higher, but you know, if you think, for example, of infrastructure investment, the cost of those investments, the interest cost is at a historic low, and where these investments are productive, they can pay off very handsomely, including raising the incentives for private sector to come in with its own investment. So from the standpoint of simply increasing national income, more infrastructure looks like a good bet, and I don't think we should take a very narrow view of fiscal space when we evaluate it.
Dr. Obstfeld, do you see the U.S. raising their interest rates this year at all? Or will the Fed, you know, raise rates only in 2017?
You know, I think their decision is very data dependent, and it's hard to forecast the data. You know, I think even the pessimists in markets think there'll be at least some further tightening, but again, they're looking at the data, and to the extent that the global economy affects the U.S. economy, which it certainly does, they'll be monitoring and reacting to that.
Dr. Obstfeld, before you go, what's your comment on India? We still have an over 5.5% inflation. Are India's macros giving you the confidence that inflation will decline and growth will be better next year?
Yeah, I think the macro policies have been strong, and the fall in inflation from recent highs is very encouraging. That's not to say that there are not challenges ahead for both fiscal policy and monetary policy. You know, in the monetary area, the you know, specific nature of the Indian CPI, the high weight of food prices, and the supply factors in that market are going to be important determinants of how inflation behaves. And there are certainly supply side reforms that could make the RBI's task much easier. You know, on the fiscal side, fiscal revenues could be put on a much firmer basis if the goods and services tax were passed, and that would allow the government to maybe pursue more in the infrastructure realm. So a lot of progress has been made, but certainly there's room for more.
Okay, one final question. Do you think after 2 El Nino years, this year, 2016, food inflation may be a new problem that the world and India will have to face?
Yeah, I'm not going to hazard an answer on that. I think clearly the pattern of weather and the extent to which that has been influenced by climate change is wreaking havoc in many parts of the world, and the progress that the community of nations made in Paris is going to be very important in addressing this.
Well, Dr. Obstfeld, thank you very much for joining us on this special edition of Indianomics. We need to take a break, but thereafter we will be joined by Vinals, the Director of the Monetary and Capital Markets Department of the IMF.